Hello and welcome, everyone. Thank you very much for taking the time out of your day to join this Private Equity Wire webinar organized in partnership with V7. We're here today to check in with the world of private markets on how their AI journeys are going. It's a very hotly debated topic, much discussed, and we're here to explore further this concept that's floating around the market of an AI agent and how that can help accelerate private equity operations. Now, the context of this conversation is very much in terms of some significant market forces or market conditions that are facing the industry right now, including pressure on deal making, the refocus on value creation when we've moved away from that multiple to margin expansion model. There's fierce and fast competition for high quality assets in the market. There's a wide range of risk factors unfolding, including when you look at the macroeconomic landscape, but also when it comes to just sheer AI disruption risk to the portfolio companies of private markets firms. And finally, we have a rapidly diversifying investor base, moving away from the traditional institutional bread and butter proposition towards a more wealth-oriented and even in many cases a retail-oriented proposition. So all of these trends and many more are combining to necessitate a more efficient and sophisticated private markets operation. And today we're going to kind of touch on each aspect of the investment lifecycle from pre-deal due diligence through value creation and portfolio management, all the way through to investor relations and reporting. And we're going to be examining the role that AI is currently playing and could be playing in all of these functions. Helping us do this is a panel of high-profile experts who have very kindly taken the time to join us today and share their thoughts. We are waiting for one more panelist who's having a bit of technical difficulty. That is Damien from Eurazeo. But in the meantime, we're very happy to get started with the panelists we have. Before I hand over to them to introduce themselves, I just want to let everyone know that we do have a Q&A function in this session, and we're hoping to keep it as interactive as possible. I'm sure everyone here has come with a problem to solve or a question to ask. So please do use the Q&A function to type out your question, which you can do so anonymously if you please. And I will come around to as many as possible over the course of the next 45 minutes. All right, we have a lot of ground to cover, so without much further ado, I'd like to hand over to our panelists. Mike, would you like to kick us off with an introduction?
I will, of course. Thank you, Aftab. So most of my career has been in markets. Started life as an academic, then worked in the two big Swiss banks, UBS, Credit Suisse, was chief investment officer of Credit Suisse. Left there about 6 years ago, and then I've had a kind of a more of an entrepreneurial venture, private market journey. Did a few startups, and then in recent years become really fascinated by venture in particular, and also the evolution of private markets. If I recall in my career, if I go back to sort of the early 2000s, some public markets then, like corporate credit, for example, were only just beginning to be institutionalized in terms of data, benchmarks, funds, etc. And then they've really evolved since. And I'm fascinated by private markets because I think we're in the foothills of a major new trend, which is not just the evolution of the private equity venture infrastructure secondaries market itself, but also access to that. And there's more and more talk both in the UK, the US, Europe, about everyday people like us being able to get access to private funds. I would caveat that by saying that the dispersion in performance between those funds is really big compared to public markets. And I think one of the things we try and do very, very carefully at Moonfare is we have a big investment team who try and parse the good from the bad, because you can get that quite big divergence. And AI is becoming part of that, not just in terms of the investment process, but also the way it's changing industries. And perhaps the way we would have looked at specific industries 1 or 2 years ago is really beginning to change quite dramatically. And also, I think even things like mergers, IPOs, that whole process is going to be changed by AI. So I think this is a very interesting discussion potentially. And I think it's a sort of a seed discussion in the sense that I think people are only beginning to discover the impact of AI on investment processes.
Well, hopefully we can realize that potential of it being an interesting discussion. And it is a parallel that's often drawn, isn't it, between that public and private markets, especially given the fact that, as you said, there's increasingly that retail access, the fund structures, the liquidity that these fund structures offer to investors, as well as the use of AI in the actual investment process,
Uh,
the accelerated execution. So, and I imagine that the progress of AI will only kind of narrow that gap. And I'll come to you in a second, Mike, but I'm just going to hand over to Alberto as well for a quick introduction. Alberto, take it away.
Thanks, Aftab, and great to be here. So I'm Alberto, co-founder and CEO of V7. I've been working within the AI space for 10 years. V7 is my second startup in the space of deep learning. But I technically come from a business background, formally in university, and my very first internship was at an investment bank when I was 18. And I was disenamored by the amount of manual work that has to happen whenever there's a financial transaction that happening in the form of due diligence, um, to the point where I felt like I was effectively the AI agent there, going through tons and tons of documents, looking through numbers in a tedious and somewhat repetitive way. And with the emergence of transformer models, or what we call large language models today, we saw an opportunity in effectively using these as much faster analysts that could read through thousands of documents in one go, extract the information that they need to, and then emulate the same reasoning steps that an analyst would normally do when evaluating an investment opportunity. And that's what we do with our V7 Go product, that is effectively a workflow automation tool that is able to understand large quantities of company information, documents, recordings, emails, and through the use of AI agents that are effectively AI models that also have the concept of time. They take a little bit of time to complete a task. They're able to eliminate what we today we call back office and middle office work, giving us the opportunity to focus more on the more fun part of the job, which is the interpersonal and creative aspects of it. Having been someone that started in the back office of an investment bank, I know that it's usually not what most folks aspire to, and we're in the process right now of giving effectively superpowers to any analyst, giving them the ability to delegate tasks to AI agents that complete their work very thoroughly and give them access to finalized outputs and finalized reports that are just as good as what they would do in the span of 5 to 7 hours, but in an arc of 15 minutes instead.
Yeah, it's fascinating. We have an interesting dichotomy of perspectives here, which is, well, Alberto, you're giving them this best case scenario, and we have a couple of firms on here that are probably working towards that ideal end state and are probably looking to kind of solve some key challenges on their journey.
I was just going to start maybe with the idea of research and analysis. So I'm chief economist at Moonfare, and I'm going to show my age, but going back in time when I started as an academic, just the research process of acquiring data and tools was at the time very slow and has really sped up. And in the markets space broadly, I mean, there are thousands of people who are economists or CIOs in public markets. And I find there are relatively very few in private markets, which I find quite interesting, given that private markets are much more tethered to the real economy, and much more dependent on things like the business cycle. So it's a more, if you like, friendly, a rich environment for economists. One, I think, issue is that there's just much less data publicly available in private markets. And I think one of the things we're going to see with AI in terms of the analytics is the evolution of data sets, discrete data sets. I think we'll see a debate around the privacy of data. I mean, at Moonfare, we have a vast array of relationships with private equity firms, and also our clients, and we're very, very careful with that data, so we keep it all in house. But I think big private equity firms that have got a big history of deals, that have built up very rich ecosystems, and that can analyze this data, will probably be at something of an advantage. And I think the first point I would make is that AI offers firms who've got big platforms the ability effectively to systematize their ecosystems, and to give them something that's potentially quite proprietary.
Absolutely. And when you mentioned there that it's far more tethered to market cycles and that research component becomes so important, can you elaborate a little bit more on that side of things?
I mean, I think, as a very simple statement, public markets can remain overvalued for a very, very long time. And often in public markets, the expensive stuff goes up more than the sort of the cheap stuff. And you can have times when, if you look at the real economy at the moment, we're beset by wars, by a trade war. The public markets are taking a very strong view on that. Bond market and the equity market have got very, very different views. I think in private markets, there is maybe a view that's slightly more grounded to the economy, because in the private world, these are decisions that will stick with you for a very, very long time. And they're harder to hedge. So I think people are much more careful, be they CFOs and CEOs, in terms of making investments, making mergers, or venture and private equity executives doing deals. What we're beginning to see, I think, is that the shape of deals is being conditioned by the trade war. There are perhaps going to be fewer cross-border deals. I think mid-market PE is going to be very interesting because of just the disruptive effect of Donald Trump, and also deregulation across a whole range of sectors. And then to dig into AI, I think what that can do at a number of levels is just make the selection of deals a lot quicker, and sort of make it speeds up the process by which a private equity portfolio manager would be ready to really dig into the diligence. And AI, of course, can help with some of that kind of the boring diligence. I don't think it will ever replace full human diligence.
And it's interesting because we did a piece of research earlier this year about the use of tech in private markets, and the biggest phase in which it is used is this research and pre-deal phase, and that's where it tends to be, as you mentioned, especially at the moment, there seems to be so many factors to consider, so it might have a high value application. Alberto, do you have a response to what Mike mentioned there in terms of just the way in which private markets are evolving in the research phase, at least?
Research is usually it's a low-hanging fruit because it's hard to say that the research contains wrong answers. It just finds information, then presents it back. And so it's a great use case for AI to get started with. A, because AI is very fast at producing research. B, because the output that it produces will sometimes include something that you may have missed yourself, as you might not be scouring through thousands of docs or web links, and so on. So there's a lot of folks that use OpenAI Deep Research, for example, the one that's available in ChatGPT, to just get some information about a particular set of competitors, and then they can narrow that down using another model to actually find the information that you need. But one component that's still missing on research agents, especially in many of these consumer products, is directing it to the right sources, to the right area. In some cases, it's searching within your intranet. In other cases, it's searching within the public internet. If we look at non-private markets, we look at SEC filings, for example, fairly common use case to just look through them at scale and then perform that type of search. It's a fairly easy use case though, because it's mainly about retrieval and abstraction. Retrieval is basically finding your links, similar to a Google search. Abstraction is given all these links, read through all of them, and extract the information that we actually need. The more complex use cases, as Mike mentioned, in due diligence have to do with making decisions, because a decision is usually grounded in a thesis and in experience. And models are still not great at handling their own memory. And that's where agents are a little bit better. When an agent needs to make a decision about an investment, or if they're looking at a data room and they're performing due diligence and they need to make a decision, how they make the decision might be based on the source document, on the information that they extract from it, and also maybe on the past history of similar investments, or the investment thesis of the firm itself, or maybe some figures that change every month about the availability of capital, or the expectations on revenue growth for a particular business and category. And these change fairly often. And that requires a little bit more of advanced configuration than what you might get out of the box by just prompting a model. And in turn, it requires the company to actually have a practice where they build these agents and maintain these agents almost as if they were training employees and retraining them. The difference is obviously it's just a matter of changing text on a UI, and then this analyst agent, if you will now have learned this and be of service to everyone else within the firm. So it's a much faster process, but it's still a more advanced process than just retrieving information from the web or the internet and then reporting back with findings, which is usually one of the best starting points for adopting AI within any kind of financial services firm.
And that point that Mike mentioned about the availability of data, obviously that's a long debated, in private markets, the fact that data is just not that as readily available. How are you, I mean, how do you see firms addressing that challenge?
There's two ways in which AI models effectively give you answers. One is from information in the training data of the model, and one is from what it's able to insert in its context window, which you can think of as its short-term memory. Information from within the model is unreliable. In many cases, it comes from the internet, and if you ask ChatGPT, what does V7 do as a business, it would give you an answer based on what it read during training time. And that information is usually fair, but it's coming out of its effectively gut feel memory about that specific topic. Instead, what these models are, the better way of using these models, especially in professional work, is for them to say, okay, let me go right now and read V7's website. Let me go and search into our SharePoint about any document that we have related to V7, whether it's a recording that's happened with me where I maybe have shared some numbers, or maybe there's a P&L somewhere. And then let me take some of this information, put it in my short-term memory, and then actually provide that info back to the user. And something that we do on top of that is make that grounded and verifiable. So if you're looking at an information memorandum, for example, it could be 70 pages long, contain a lot of financial information in detail, and verifying the veracity of what an AI is telling you about that document can be quite tedious. And so every claim ideally doesn't just have a source or a reference link to the document, or to the page, but exactly to the location where that information is being sourced from. And it's not that simple to do that in large scale across thousands of docs. You actually have to do some engineering, old school engineering with manual code outside of the AI's thinking, where you index all the position of every string of text throughout the document using OCR. And then you tell the AI, okay, we need to go and find exactly where you're getting this information from, which is currently in the short-term memory, trace it back to the source, and make sure that it's correct. One more point on top of that is that there's a lot of reasoning models out there now. Reasoning models, instead of just giving you the next string of tokens that it thinks, which is, if you read the Kahneman book, Thinking Fast and Slow, it's the fast thinking. It's like, yes, this is the answer. Reasoning has the model effectively talk to itself for a little bit and then give you an answer. And this again increases accuracy even further, so that if you're exposing this reasoning to the user, and if you're allowing it to perform some reasoning steps before giving an answer, you can allow users to effectively see and verify that this information is ultimately correct. And then finally, there's this human and AI tandem experience, where in most cases, humans, especially when dealing with an investment decision, want to verify that all the workflow steps that the AI has taken on retrieving, on grounding the information, on reasoning through a decision are correct, and making that experience as easy as possible for a user in front of their laptop ultimately leads to the decision of whether you should adopt this AI workflow or not. If it's too much of a black box, the first time you see an answer that is incorrect or dubious, without the ability to trace back how it got there, that's when you stop trusting AI, and that's usually what kills the adoption flow and starts to create this series of AI dissenters within a firm. And it happens more often than we think.
Fantastic. Thank you for that. I'll just come to you in a second, Mike, but I believe we have Damien now dialing in. Hi, Damien. Can you hear us?
Hello, I can hear you. I don't know if you can hear me. Finally. Sorry about that technical problem. And I missed some of your discussion, so I hope I won't
Not at
repeat
all. So
anything you already said, but maybe I can do a quick intro of what I'm doing, where I'm working.
absolutely. Yes, please.
Yeah, so I'm managing director at Eurazeo. Eurazeo is a private equity fund of 35 billion under management. Half of it is large buyout and small buyout activity. 1/4 of it is related to debt, fund infrastructure, and 1/4 of it of the asset under management is related to tech investments where I'm working at. We invest in a minority stake of tech company, impact company, biotech. And at Eurazeo, I have an operating role. I sit on board of several portfolio companies, including some companies that have a AI platform. So at Eurazeo, AI is key for lots of reasons. Firstly, like any kind of tech investor, it is one of our main focus when we're looking for new deals. But we, as operating director at Eurazeo, it is also very key to monitor my company. I am at the board because all of my SaaS company has in the last two years to focus on two subjects. First one was growing with profitability, and second one adding AI in their platform. So it has been a very large focus for me in my portfolio. And I will add a last point is that internally at Eurazeo, we are lucky to have a very strong CTO with a large team of 5 persons that are dedicated to create some AI tools for us to do our job better. So it's still at the beginning for us. We already have some good example of things that are helping us doing our job internally.
And one of the things we were discussing, David, when you joined was just the use of AI in the pre-deal due diligence research phase, which tends to be the biggest, the low-hanging fruit, the phase in which firms most leverage AI at the moment. Is that roughly similar to Eurazeo's experience as well?
Yeah, so today, to be honest, the really first AI tools that are helping us a lot is how to generate documents. We have for each activity, we have a kind of model of memorandum of investments. And so which creates something really easy for us to generate. So we are training our platform. We have an internal platform that we call Eurazeo.ai, where we are very, very controlled and with all documents that are only internal. So when we are access to a VDR, you can download all these documents and input it in our AI platform, and it can generate first draft of our memo. So it saves like 6 to 8 hours of time to generate this first draft. So it's helping a lot. It's the first tool that we had. We also have in the deal part of our analysis, we use the AI tools that helping us looking at LinkedIn to see if there is like some big change around employees in some companies. And most of it when the company, because we are doing seed and Series A investment, and it's helping monitor sometimes something happening in the company. There is some employees that going in that one, some good profile, and it helps sometimes to find some good deals before even the deal is in the market. So for us, I would say that in this pre-deal section, this is the 2 internal tools that we are using.
Fantastic. Thank you. Mike, I'm going to come to you for general, post-deal portfolio management and general monitoring that tends to be. And there's 2 aspects of the way in which AI interacts with the portfolio. One is at the firm level when you're monitoring your investments, but also there's a lot of AI-enabled value creation happening. There's a lot of levers that can be pulled at the portfolio level. Whichever one you're more comfortable speaking to, from a Moonfare perspective, the way in which AI is helping to really monitor the investments and give you that the overview that you need right now. Can you elaborate a little bit?
Yeah, and that's important because I think private companies are there's much less information published about them than public companies because the requirements are just quite different. So using AI to gather sometimes noise, sometimes information around some of these firms and also around the sectors is actually very useful just to provide. I think Dame gave a couple of very good examples, just to provide a steer if there's sort of volatility either in individual companies or sectors that then prompts a manager just to dig into a firm, maybe have a chat with management. It's also, I think one area where I'm beginning to see it deployed quite a bit is in consumer-facing companies, and using AI to pick up changes in consumer tastes. I've spoken to a few managers who are pushing portfolio companies to use go-to-market services that deploy AI in terms of, trying to scale their product and maybe catch consumer shifts.
Fantastic. Alberto, I want to come to you with the portfolio monitoring aspect as well. But before that, just to take a quick question from the audience for Damien, something you said, someone is asking if you could disclose the AI tool that you use to track LinkedIn data.
Yeah, so we have some tools have been created by our own team, so related to obviously LLM like Mistral or OpenAI. Just for you to know, we are a seed investor from Mistral too, so we know very well the team and working with them. But we are trying to build our own tools because, as you probably said in the discussion, everybody has access to the information that is available on the web. So when you're using OpenAI or Mistral and you ask for a task, you're gonna have the same kind of value that any other guy using it. So what we have internally is our data. Our data, is very key to help us making our job better analysis. So I think on our side, we are creating our own tools by using LLM. For now, there is one company that we are working with is Dust internally that helping us on AI agents. This is a big subject on our side. It's still the beginning of it for us, but there is lots of subjects about AI agents, and the Dust is the one for now that we have chosen to help us on that.
Fantastic, thank you. And just a reminder to everyone else.
DUST.
Apologies, David. Just a reminder to everyone else that we do have a Q&A function. So if you do want to ask any questions to our panelists, I'll come around to as many as possible. Alberto, just to bring the portfolio monitoring, you talked about the ways in which AI computes information. You've kind of walked us through all of that. In what ways does that then apply to the portfolio monitoring phase and the value creation phase potentially?
Yeah, super common use case. So we talked earlier about using AI agents to monitor LinkedIn and the number of employee growth, or effectively who is joining a specific company. Let's say that this is before someone ever joins the portfolio, you're tracking 500 companies out there. It's actually quite a tedious task to capture signals every day on a continuous basis. If you could delegate that to an intern, you probably would. And that's the experience that we create with developing an agent for it. The agent is given a list of 500 companies, or maybe we need to go and find ones that we still don't know about. And then for each one, every week or every day, they can look at their LinkedIn to see if the employee count has changed. They could go onto the Twitter profile of the founders and see maybe if someone of high profile has started following them, or maybe another fund. All these signals are out there on the internet, and AI will help us unlock them in a faster way. And that's one small low-hanging fruit to create for effectively opportunities that are out there. The same goes for portfolio monitoring. If you're a fund and you're receiving data, information, board decks from all of your portfolio companies, you want to aggregate them in a place that isn't just a CRM where you have to manually do data entry, because eventually you won't. There's probably only a very small sliver of the most important information that you're putting on there, but you might not include information about who they hired more recently or what the customers have they closed more recently. And that's useful information also for your other portfolio companies to either get introductions or see what products are gaining the most traction. And so in the same vein, we have a feature called Knowledge Hubs, which effectively indexes all this information and populates it in a pseudo wiki, if you will, where you can then see all of your portfolio. You can see their latest ACV or their latest customers that were closed over the last quarter, perhaps. And all this information should be easily searchable within your knowledge base. We have the technology for doing so. It doesn't require many additional breakthroughs. It just requires companies to be open to accessing this data. So ideally, if you have things on SharePoint or if you have things in one repository. And then on the other side, it does require a little bit of configuration at first to define what are the metrics that you're tracking for each one of these companies. So it does still require a little bit of an investment in configuring these AI agents the right way, rather than just giving it a query and expecting it to always give you the answers the way you want to. When you start getting the hang of configuring agents to do this type of portfolio monitoring, that's when you actually start seeing the right returns. And it's the same concept for producing IC memos that Damien mentioned earlier. Um, Another fairly common use case, IC memos are fairly standardized, or at least by design, because we don't want to see something wildly different each time. Um, but the input data is always different. It's unstructured. It comes from a completely different company each time. There might be different ways of measuring specific metrics, like ARR versus CARR versus non-recurring revenue, etc. And having an AI agent that can look through that and then produce 80% of the AC memo can also be a pretty big advantage for any firm that is trying to accelerate deal flow.
Yeah, fantastic. Thanks for that, Alberto. And Mike, I want to bring this, last final 10 minutes, 10, 15 minutes
Yeah.
on to the investor relation side of things. And given Moonfare, the investor base has shifted very much towards that more wealth retail side of things in private markets in general. And you guys are very much at the cutting edge of this. And I imagine the expectations, we did an LP special report in June, and there was a very clear dichotomy in the way in which investors expect their private markets investment experience to unfold. And there's very much on the family and wealth space and even down to the retail space an expectation that it'll mirror their consumer banking experience. They want that extra, they want everything available immediately. They want that extra granular insights because a lot of these investors are doing it as a passion. It's not
Yeah.
a day job where they can sift through Excel. They want that readily available information, more granular, the more they can have, the better. So in what ways is AI facilitating that shift towards delivering that more consumer experience for private markets?
So this is the thing where we have to be very careful, because finance is a big spectrum, and there are parts of it that can be automated, parts of it that are very transactional, and even stock trading or payments, etc., where you can use technology, AI. The business we're in at Moonfare is relationship driven, and that's on two sides. One is the relationship with the big successful PE and venture funds that we built up over time, and then the other is the relationship with clients. And I think we would resist the temptation to try and dehumanize that. My own personal learning from fintech is that, I think tech people will try and they'll see banking processes that are inefficient and try and define a more efficient way of doing that. But what they miss is that they miss the human element. And I think is when you get into transactions that are more long term and have got several stages, more relationship driven, and that are bigger in terms of their quantum, you typically have more human involvement. So, for example, I can never see AI taking over the investment decision process to invest in a private equity fund or firm, or the same for VC, in the same way that AI can trade stocks, because there's so many human factors and judgmental factors involved. And then on the other side, I mean, we're very, very careful in terms of how we reach out to people. And I think our most successful client relationships are based on human interaction relationships with very, very good technology and a very good platform as a backup.
But at the same time, that I imagine that AI, given the risk considerations that come in the wealth space, there's a lot more need for that liquidity and to kind of forward map cash flow and risk because there's less.
Exactly, yeah. So I think the analytics on our platform, and I guess really help to enable that relationship and to take the difficult parts out of it effectively. Yeah.
Absolutely fantastic. And Damien, to come to you as well, in terms of that investor experience, the reporting side of it, the risk reporting side of it, but in general, the experience that you're providing, in what ways is Eurazeo kind of leveraging that AI space to appeal even to a new breed of investor, but also to old investors that are growing more sophisticated?
Yeah, so I would take two examples for that. I am board member of a company that called Midaxo, creating a AI platform for the corp dev team. So at Midaxo, this platform is using from the deal generation to VDR to CRM, and the way Midaxo is using AI is to getting very easy access to the team to all the information that is helping them to create any kind of marketing and deck for the boards and for also the investor, because most of these corp dev customer Midaxo have are private equity firms that want to have this kind of monitoring. So at a corp dev, I would say that in the M&A space, I think that some of these companies are doing like 1, 2, 3 deals a month. So they need this kind of AI platform, AI tools that's helping them to go very quicker in finding a deal, doing the due diligence, and having a nice PMI process. This is why I would say, for monitoring of our portfolio, I think this is something that creates value for them, especially when you have a corporate team. At the Eurazeo level, we have a project that I'm working on for a few weeks now to create AI agents by companies of my portfolio. The way I'm starting to structure it, but it's still under process, is like I have access of so many information about my company I'm monitoring, and I'm at the board. So I'm starting to structure all these documents I have, board after board, quarter after quarter, and I'm starting to train AI agents for him to have access to all the information that's related to the sector of my company. And like that, it can create just before my board, one day before, a kind of newsletter that's helping me to process what has happened in my company between the 2 quarters by analyzing the document, and also giving me the 4 or 5 best news you can find about my market. This helping me preparing my board, helping me getting smarter when I go to the board, but it's also helping me, after my board, giving access to this information for my portfolio and valuation team, because obviously by having this direct access to information, data, financials, they can do much better the work of doing the valuation and also providing in the reporting for our LPs information that are directly linked to my documentation. So this helps me, getting much quicker for doing my job, much better, because obviously we are doing I have 20 boards that I'm managing, so I need this to help me doing better my job, but also helping my LPs to have better information.
Fantastic. And Alberto, just to come to you in terms of use cases for that investor relations side of things, to lay them out for us.
My dream is that when we go for our next round of fundraising, it's all going to be done through V7 Go. Our data room is effectively navigable through the platform, and you can ask any questions and get any statistics that you need in graph form. And we're close to that point. But I think the fundamental software experience that we want to create is just in time and on demand. And as long as the data is present and indexed correctly, that is a possibility with today's technology. We also work with LP funds quite a bit that both need to aggregate all the information that they get from their own GP funds, um, as well as sometimes for their own evaluation of investments into GPs. And from a technology perspective, it's quite similar. It's still the ingestion of a lot of unstructured data and then a workflow that ultimately leads to an investment recommendation on the other side. So from, even though the job in its details is quite different, if you strip it down to the actual technical components, it looks quite similar. The workflow looks fairly similar and doesn't require a reinvention of the wheel. Um, in terms of the portfolio monitoring, it does present this additional challenge. And this is maybe for anyone that are looking at using or evaluating AI tools today. There's an element of scale the more up the upstream you go, where think of you might, if you're an LP with 20 GP funds you've invested into, each one of them has then a portfolio of 30 startups. That's quite a lot of information that gets rolled in every quarter. And one of the challenges there is being able to wrangle all this data at scale. The way we solve it within V7 is that everything is effectively a row in a table. A run row being, for example, a data room, and within that there's a table with all the files present. Within, for example, one document related to one fund in particular, one of the cells might contain the information of 30 startups. And then within that cell, there's another subtable where every row in that cell is the information from one startup containing their own documents. And so it's a fairly complex relational database process that we try to abstract away so people don't have to worry about it, but much more complex than just prompting a model saying, here's a data room, please work it out for us. And creating this, when evaluating these tools, it's important to evaluate the AI performance, but it's even more important to evaluate the traditional engineering. And it's weird to say traditional for anything that has to do with manually written code nowadays, because those are the things that actually are slowest to improve, far less than the performance of model. The performance of models is moving quite fast, and there's a lot of investment. There's a lot of money to burn for OpenAI and Anthropic to improve the performance of these models. But your vendor's ability to wrangle the size of documents that you have and also to break it down into sub-databases and understanding nuances within the documents, like graphs that might be embedded within a deck, or Excel files that have multiple tabs, which are held to process, or even large language models don't really understand them very well. Those are the things that are important to look into, because they take far longer. They need to be solved by humans. They can't be solved by AI to actually fix. So that would be a recommendation for looking at anything on the choice of AI tools today.
Fantastic. And really quickly, Alberto, before I move to closing statements, there's a question in the Q&A on for AI tools to work. Do you recommend that firms utilize SharePoint? Is that a question that you'd be happy to answer?
Yeah, I absolutely can. So it's very common in what we see because it's one repository for all of your docs. In general, I think every firm should think of its files, its recordings, if those are legally possible, and in some cases its emails, as knowledge that the firm eventually wants to be able to query and understand. And SharePoint is a great place to start indexing or maintaining all of your files so they can be indexed by AI. It's very easy to integrate with compared to other tools. And so maybe, yeah, there's now an advantage even more, especially with MCP coming out, Model Context Protocol, for AIs talking to other AIs, to work with vendors that have open APIs that allow AI models to go inside of them and then retrieve the files, index the files, and read through them. TLDR, yes, SharePoint is great. And you no longer need to be super neat in your directory structure as you did. Um, and something that we're working towards is that if you do have a directory structure, which I obviously recommend, um, it won't be long before you can just throw a file into an AI and it will put it in the right place, like a librarian would, instead of having to navigate an internal directory structure to find exactly where it needs to be, in which folder, subfolder, and so on.
Fantastic. More like a TLDL in this case. But I'm mindful we started a bit late, so we're going to wrap up in the next 2 or 3 minutes. I just want to come to each one of you for a quick closing statement on AI and the next phase of development in private markets and what you're looking forward to, whether that's in your own firms or in the industry as a whole. Mike, I'll come to you first for this.
Yeah, so I'll say two things on AI. I mean, it's changing labor markets at the very elite level. It's changing. It's what we're going to see, I think, in the next year is that it's going to change industry structure in the chemicals industry, in fintech, etc. And I think people haven't really got their heads around that yet. In terms of actual investing, I will finish by saying that if I was an investor going to invest in V7, the speed at which I can understand the company and its success has never been quicker. But I'd still probably want to go for dinner and a drink with Alberto to get a sense of the founder. So there's still human factors involved.
Absolutely, and that's very reassuring. Wouldn't want to take AI for a drink, would we? Damien, your closing statement.
Yeah, I think today we are at the very beginning of what we can do and how much we will implement it in our portfolio, in our way of doing deals, in our way of living. So we are very excited at Eurazeo to see this kind of convergence of embedded secure AI with operational workflow. We combine with internal transformation at team like Eurazeo. So at every stage, we think that it's going to have an impact. After we see also that there is kind of marketing and communication AI not always being having direct impact. So we need to be careful. It's the very beginning, but we need to be aware. We need to be involved in all this kind of subject because it's going to be the next thing.
Fantastic, Alberto.
I agree with Mike. I think if all private equity firms invested in companies purely on the P&L or in numbers that are explicitly stated somewhere, A, it wouldn't be differentiated at all, and B, it wouldn't be intellectually honest. There's a lot more that needs to be picked up from the humans in a business than it's actually revealed in the data. And we can start using it today to get rid of all the tasks that are already revealed somewhere in the data that we normally don't enjoy doing. And I would like to add that for anyone that's considering using AI today and hasn't made any significant production deployments of an agent or something similar, it's kind of a counterintuitive process where you learn a lot more by building something, and then it unlocks the actual use cases that you want to solve one or two projects down the road. And we internally at V7 do the same. If we want to try and scope out a project, we no longer plan it out in frameworks or wireframes. We start building a prototype for it. We start seeing how well it actually functions. And usually the bulk of the ideas of where its best applications actually are come after the prototyping stage. So I would encourage for people to jump into proof of concepts sometimes before you feel like you're ready or you've identified the perfect use case, because it's better to unlock it after you're riding the bicycle than starting cold.
Fantastic. Lots of insight there to unpack and digest. So thank you very much, gentlemen. We'll leave it there. Mike, Alberto, and Damien, thank you for joining the call today, and for everyone for listening in. Thank you very much.